This is Scott Becker with the Becker Private Equity and Business Podcast and the Becker Business Minute Podcast. Today's story is Silicon Valley Bank and 7 related storylines. So 7 related storylines to the Silicon Valley failure. The first is what you're seeing today is a huge flight to safety in 2 different ways. First, people buying U.S. Treasuries, figuring that's the safest thing out there. If the U.S. government fails, we're all in trouble. And second, the movement away from small banks to larger banks, figuring at the end of the day, the J.P. Morgans, the Banks of America, the Fidelities, the Vanguards will be too big to fail. And we'll see how that plays through. But this flight to safety is people get scared to be at smaller banks. Second, the vast mismanagement of Silicon Valley Bank and other banks. This is sort of a misunderstanding of basic economics. So myself, I'm a basic investor. Over the last few years, I've kept all my holdings in treasuries relatively short because I understand if I'm long on treasuries, if we've got 10 and 20-year treasuries and interest rates go up, then the value of those longer-term treasuries goes down. What you have here with the major banks is a basic misunderstanding of economics. They're lending out money on 15 and 30-year terms, on fixed terms at relatively low rates. Thus, when their borrowing costs go up and the yield on mortgages goes up to 6-7%, if you're out there issuing 3-4% loans or 3-4% mortgages, the value of those mortgages on your balance sheets gets slammed. It's sort of this very basic misunderstanding of Econ 101 by many of the banks that are out there. Silicon Valley Bank, a huge sort of disaster here. They moved a lot of their business from the venture capital businesses that slowed down to what they'd really been known to the mortgage business, and had just an absolute disaster in doing so. But basically horrendous sort of leadership and risk management. Third storyline, the government stepping into guarantee deposits. And this is probably necessary to avoid a full-scale panic, a full-scale panic in the markets and everything. What's fascinating about this is there's very strong narratives. Given the 2008 bailing out of the banks, they don't want to be seen as bailing out of the banks, but they're going to bail out the depositors. And this may be a real distinction without a difference, but a political line that our politicians feel that they could live with. Fourth is the increased movement to larger banks. Everybody's going to want their money at larger versus smaller banks that are viewed as too big to fail, and we'll see how that plays through. Fifth, and this is something we talk about all the time, and I hate to be a broken record, the government has to get their deficits under control. Whether your bias is less spending or your bias is more taxes, one way or another, the government has to get their deficits under control. When you have a horrendous balance sheet, just like a family that has a horrendous balance sheet or a company that has a horrendous balance sheet, you're in a position where you're less flexible to handle big challenges and big problems. So one way or another, the government has to get their deficit under control. The more the deficit is under control, the less able the government is to respond to crises like this. The next point, I guess, is sixth, is the need for the Fed to take a pause in rate hikes. Now, the Fed's not to blame for what happened here, but as the Fed raises rates to fight inflation, it has got to be much clearer with the government that they can't do it alone. If they do it alone, they drive up the borrowing cost of businesses, of consumers, of everybody to a spot where you're going to have horrible outcomes like this. If they do it towards a target Fed funds rate and the government stops the deficit spending, which also leads to inflation, you could possibly get to that happy medium. So that's sort of the 6 points so far. The 7th point is we'll see over the next couple of weeks how this all plays out. Futures and the stock market are all over the place as people start to try and figure out, or the market's all over the place, as people trying to figure out what this is going to mean in the longer term run for the financial and for the U.S. economy. Thank you for listening to the Becker Private Equity and Becker Business Minute podcast. Again, the Silicon Valley Bank collapse and 7 related storylines. Thank you for listening.